In the world of e-commerce, you've got your giants, and then you have absolute forces of nature. Today, we're diving into PDD Holdings, the parent company behind Temu and Pinduoduo. And honestly, it's one of the most explosive and controversial companies out there right now. This is a company that has completely rewritten the playbook in China and is now pouring billions of dollars into doing the exact same thing across the globe. So it really begs the question, is this disruptor on its way to becoming the new king of e-commerce? To get a sense of the sheer scale we're talking about, just look at this number, $54 billion. And that's not its valuation, that's its revenue for 2024. This came after a mind-boggling 59% year-over-year growth, a rate that's almost unheard of for a company this big. Okay, so how do we even get our heads around this beast? Well, you have to understand that PDD isn't just one company. It's really a tale of two platforms. It's powered by two very different but connected engines, one that completely conquered China and another that's making a huge, expensive bet to conquer the rest of the world.
It all started with this one, Pinduoduo. This is PDD's original platform, which launched back in 2015. And in less than 10 years, it went from a scrappy little startup to an absolute titan in Chinese e-commerce. So how on earth did they do it?
They did it with an innovation that was, well, kind of genius. Social group buying. So instead of just shopping by yourself, Pinduoduo got users to team up with friends, family, even strangers through social media. If you formed a group, you'd unlock way lower prices. It basically turned shopping from a solo activity into a viral, game-like experience.
And that just kicked off this incredibly powerful, self-reinforcing cycle, a classic network effect, right? The more users that joined, the easier it was to find a group to buy with. That huge audience then attracted more and more merchants, which drove prices down even further, and of course those super low prices pulled in even more users. The flywheel just kept spinning faster and faster.
The result of this strategy was, well, it was nothing short of stunning. In just 5 years, by the end of 2020, this upstart company had more annual active buyers than Alibaba, the incumbent that had been around for 2 decades. It was this huge symbolic moment that proved their model wasn't just a gimmick, it was a real threat. So, with the China engine just humming along and generating massive profits, PDD's leadership asked a pretty bold question. Could this playbook actually work on a global scale? And that question led to the next chapter of their story, the launch of Temu in late 2022. This slide really captures the two sides of the business perfectly. On one hand, you have Pinduoduo, which is this mature, highly profitable engine just for the domestic market in China. And then you have Temu. Temu is the global, high-growth investment. It is a cash-burning machine right now, basically using all the profits from China to fuel this incredibly aggressive land grab in international markets. And that land grab, it was shockingly effective, at least at first. Using the exact same playbook of rock-bottom prices and just relentless marketing, Temu completely exploded onto the scene. Just a few months after it launched, it became the most downloaded shopping app in the United States, blowing past giants like Amazon and eBay. It really seemed like the gamble was paying off. But as you know, this kind of explosive growth is never a straight line up. Behind all these incredible numbers, there are some pretty significant hurdles and red flags. So, if we're going to evaluate PDD as a potential investment, we have to get real about the serious risks that could derail this whole story. And the risks here are pretty major. They really fall into 3 main buckets. First, PDD is facing intense competition, not just from Alibaba and JD.com in China, but globally from Amazon. Second, you've got geopolitical threats, things like tariffs, trade restrictions, that's a constant worry. And finally, there's a huge execution risk. Can PDD actually turn Temu into a sustainable, profitable business? This chart here really shows you the financial impact of all this. You can see PDD's operating margin, which peaked at these really healthy levels above 30% as the China business got bigger. But then look at that recent dip. That's the company pouring money into subsidies and Temu's global expansion. The bet, as you can see from the projection, is that those margins are going to rebound in a big way once these investments start paying off. But that's just it. It's a bet, not a guarantee. So who's the team making that bet? Well, this scorecard gives us a quick look at the leadership. Now, transparency is definitely a weak point. The company is famously secretive. But what investors are really betting on is what you see right at the top. The team gets an excellent score on strategic vision and adaptability. They've proven over and over that they can see what's coming and pivot on a dime.
Which brings us to the final verdict. We've seen the powerful growth engine, we've seen the ambitious global gamble, and we've seen the very serious risks involved. So how do we pull all of this together into a clear investment conclusion? It really all comes down to this. The bull case is all about PDD's massive scale, its proven innovative model, and that incredibly adaptive management team. The bear case, on the other hand, is centered on that immense pressure from competition, those ever-present geopolitical tensions, and the risk that they just can't make the Temu experiment profitable in the long run. But here's a crucial piece of validation from the outside. In 2025, Li Lu, who's one of the most respected value investors in the world, took a significant stake in PDD. It became nearly 18% of his fund's entire portfolio. When a disciplined, long-term thinker like him makes a move that big, it signals a deep confidence that the long-term value here outweighs those near-term risks.
And that way of thinking really aligns with this report's final recommendation. It rates PDD as a qualified buy, but, and this is a really important but, this is for long-term investors who can stomach high volatility. This is not some safe, stable stock. It is a high-growth opportunity, and it is definitely not for the faint of heart.
So ultimately, PDD Holdings is a true powerhouse built on a revolutionary model, and it's now making this huge high-stakes bet on global domination. It is the very definition of a high-risk, high-reward play. So the question this explainer leaves you with is this: based on everything you've seen, is PDD's gamble one you'd be willing to take?